I think in giving is to be another option, another way for you to use your money. But the IRA, for those in the audience who are 72, own an IRA, and like giving to charities, you fundamentally pass the test for what's called a qualified charitable distribution. I apologize for the alphabet soup we're giving you today. It's just kind of part of our jargon. And like I said, you may be able to impress your friends by dropping a QCD and a donor advice fund later today. But the qualified charitable distribution is a win-win-win because it says, hey, you're 72, you have to take that required minimum distribution every year. Now, 2020 is an exception, right? That has been waived for this year and this year only. But let's say next year, you've got to take that required minimum distribution. You're thinking, gosh, I got to take it out. It is taxable. Well, with a qualified charitable distribution, if you give it directly to the charity, like the Senior Center Foundation, you avoid the taxation, you satisfy the gift, and you had to do it anyway. So might as well, boom, boom, boom. You cannot, and this is an important cannot, take the distribution from the IRA, put it in your pocket for a few hours, and then walk down to the Senior Center and give them the check. That will be a taxable distribution. I guess you can deduct that gift later, but that is not the best way to do it. Just allow the IRA custodian to say, hey, send the check to XYZ, boom, boom. There is a qualifier. It can't go over $100,000 a year. That would be a wonderful problem to have if you want to give more than $100,000. You can talk to the folks at the foundation if you want to give them more than $100,000 in a year. I'm sure they'll be happy to discuss that further. The other kind of thing is the gift of appreciated stock. And so it may not feel like anything's appreciated in the last few months if you've turned on the television, but there have. Many of us own stocks that we purchased years and years ago. And so, heck, if you bought Kodak last Monday and you had it today, you've got a highly appreciated stock. So that's a way to give directly to the charity. Again, you essentially hand that charity the stock certificate, so to speak. There's not really stock certificates anymore, but you hand.
Some people still have them.
Some people still have them. Every once in a while we get in our office and we're like, cool, look, a real certificate. But you hand it to that charity and then the charity can sell that. They don't handle a tax gain. You avoid a tax gain, and it's something you would have given otherwise out of your taxable money. So again, this is kind of a neat current way to give. And Allie's going to give a little segue on gifts of appreciated stuff. And I use stock, but let's just call it appreciated stuff for a legacy gift. But I think, Allie, is that good for now in terms of, did I miss anything?
Good start.
Okay. Take it away, Allie.
So Ben talked about what you can do currently for your giving, and I'm going to go through 3 quick things about your legacy gifts. So this would be after your lifetime. These are probably the most common. They're also probably the easiest to set it and forget it. So we'll start with the specific bequests, which you do that through the provision in your last will and testament. So you would have to involve your attorney and have it set up in your last will and testament, but it's just a specific dollar figure or either a set percentage that you would leave to a charity. So a lot of people, that's the first thing that comes to mind when they want to leave cash to folks. So bequest is just a fancy word for it. And like I said, you would have to do that through your last will and testament, which is a great place for me to plug. If anyone in the audience does not have estate planning documents, please, if you don't hear anything else from us today, go see somebody about setting up your last will and testament. It is the only way to ensure that your assets are handled the way that you want them to be handled after your death, because if you don't decide what happens with it, the state will. So contact an attorney if you don't already have that going. And if you want to leave a specific request, like to the Senior Center Foundation or other charities, as Ben covered, that is not necessarily instead of your children or family members or things of that nature. It could be in addition to. And so your attorney will walk through that and help you set that up like you want to. The second thing is your home or some other real estate, whether it's a raw piece of land, a family farm, an investment property, especially a vacation home. If your children are not interested in inheriting that or taking on those maintenance issues and things that would come with it, real estate is another asset that can highly appreciate as you hold it over time. And so it makes it a really good option for donating to charity, because it's a pretty easy transition as well. You, again, make that provision in your last will and testament. I want either my home or the farm to go to said charity at my death, and they can then turn around and sell that non-cash property and turn it into cash, which helps fund the mission of the nonprofit or charity that you're looking to support. The last thing, as Ben said, your tangible personal property is the gift of your stuff. And your stuff is really important. We, a lot of times in our work, see folks fight over this the most. For today's conversation, we're not talking about grandmother's china that your daughter wants because of the sentimental value. We're talking about appreciated assets like your car or a boat, or maybe some special collection that would have value if the charity that you donated it to were able to sell it and then cash in on that for the donation from you. There is one other distinction that is important in tangible personal property. A lot of folks, maybe even some of you on the call, collect art. And so art is one of those things where you might make a donation of art to the senior center, for example, that would coincide with their use. So while it may not be a donation that you're looking to capitalize on the cash for, it could be that you want the art to hang in the gallery at the senior center where it's still used for public consumption and education and things of that nature. So that's also another consideration when you're doing your tangible personal property considerations. This is one of my favorite ones too, because this does not involve an attorney. So the way that you do set this up is you have what's called a separate writing, and I would keep that with your last will and testament and your other important papers so it's easily found. But you can update and change this as often or not often as you want to. So that helps as you're accumulating new art or boats or collections and things of that nature. But it also helps make it a really simple gift, whether it's going to your family or pieces and parts are going to a charity. So that's nice too, because it can just be a handwritten list. I will do one other little plug. If you can take photos, it also is helpful so that you can differentiate between which emerald ring or which set of diamond earrings you meant for Sally Sue versus what you wanted to go to the senior center for them to be able to sell and then have the donation go to that charity. So those are 3 quick ways that you can work on your legacy gift. And now that we've covered present and future gifts, I'd like to introduce Linda Roberts. She is a senior center board member and volunteer who is working on current gifts as well as legacy gifts for the senior center specifically. And she's going to share a little bit about why that mission is so important and why she's chosen to give those gifts. So Linda.
Linda, if you can unmute your iPad.
Hello?
Hey, Linda, we can hear you.
We can hear you.
You can hear me now? Great, great. I don't know if anybody can see me because on my screen I still have your wonderful faces and your screenshot, which is good. It's good to remind everybody of those things. Anyway, okay, here I am. Good. I put on earrings for this, so I want to be seen. Thank you, Ben and Allie, for that start. And I got a couple of good ideas for myself. And my place today is kind of to tell you other folks about how I personally have put some of the things into play that Ben and Allie were talking about, and how leaving a legacy is not scary. You don't have to be rich. You just have to be willing to give a little of what you have. All of us want to leave a legacy or have a legacy, whether it is the love of our family, the respect of our friends, or a donation to some charity that speaks to our heart to help others. So I'm going to tell you about the one speaking to my heart. About 10 years ago, I was semi-retired from the financial services industry. I was driving down Monroe Street, minding my own business, and my car turned into the senior center. 30 minutes later, I had taken a tour. I was suddenly a volunteer. I was a member of the foundation, and let's see what else. Oh, a participant, all in 30 minutes. And from that grew my love for and belief in the Tallahassee Senior Center and Foundation. And I dragged my family and friends along with me, and so they're believers now too. Later on, I decided that I wanted to become a member of the Legacy Circle of the foundation, which was another simple thing. I just simply stated my intention to include the Tallahassee Senior Center and Foundation in my legacy financial planning. So, as a part of my legacy, my friends and family know the best way they can honor me while I'm alive and remember me after I have gone on to my next adventure is a donation to the Tallahassee Senior Center and Foundation. In fact, when I turned 70, and when I married my first husband for the second time, my friends and family bought stars for the Galaxy Star Wall downstairs at the Senior Center. Now, I need to tell you, I've only had one husband. I just married him twice. So there hasn't been a whole series of those wonderful guys. So in following along what Ben and Allie have talked about, a percentage of my life insurance proceeds will go directly to the Tallahassee Senior Center. I was able to do the qualified charitable distribution, QCD, which again simply means transferring all or a portion of my required minimum distribution from my IRA directly to the foundation without ever touching it. And it's simple and it's fabulous because nobody gets taxed on it, not me and not the foundation. Those are a few of the things I've done so far. I'm expecting Ben and Allie to tell me a few other things along the way. And just a quick thing, again, my family is just regular people. We want to enjoy life and we want to share what we've earned and what we've saved as a part of our legacy. And there will be no angry husbands, no angry children, none of that stuff. They'll still get a little something. Our belief in the Tallahassee Senior Center has increased in these challenging times. The staff, many of whom are foundation employees, have gone above and beyond to make sure that we are happy and healthy mentally, physically, and emotionally. They have been innovative and creative with programs like the one that Capital City Trust is doing for us. And thank you so much again for that. So from my family to all of you, stay safe and healthy. And to those of you who are participating in this program, please keep signing up for them. They are wonderful, as you can tell, for all the good ideas that we've already gotten today. So back to you, Ben and Allie.
Thank you.
Thanks, Linda. We had somebody in the chat ask a question about a separate writing. So I'm going to go backwards for just a second and cover that again. So of the three ways to give legacy gifts on your screen, the tangible personal property is the only one that you don't have to work with an attorney to set up. So your tangible personal property is listed on what is called a separate writing. And that can be a handwritten piece of notebook paper. It can be typed on your computer and printed out. You could get as fancy as you want to with it or literally scribble it on a piece of paper. It helps if you sign it and date it so that you simply can tell whether or not it's in a front order or a back order or those types of things if you've made other lists. But it is how you list your tangible personal properties, cars, boats, art collections, jewelry, any of your stuff that we had covered can go on that piece of paper that you want to specifically be given to either your children or friends or the charity like we're talking about today. So Sarah, did that hopefully cover what you needed? Please let us know in the chat if you've got other questions about the tangible personal property and the separate writing. And we will have time for questions at the end too. So we're looking forward to that part.
There was another question. Jim, I saw you asked, Jim Davis asked about the TOD accounts, and I will touch on that briefly. But Allie and I say this a lot, and Linda, you had a great point. If a lot of people kind of throw their hands up and say, well, I'm not going to have an estate. This isn't a big deal. you know, in the state of Florida, if you have a box of comic books, old comic books, technically, and that's you leave this earth with just that box of comic book, that's your estate. And so you're allowed to give instructions and guidance, and you should. Sometimes it can probably be depressing in some of our meetings because we're constantly talking about dying and getting sick or something in between. But candidly, it's a reality. And I try to encourage people to talk about this with the people you love. Don't wait until it's kind of, you're in a situation where you feel like you're rushing. And none of this stuff, very rarely, is permanent, with the exception of some legal tools like an irrevocable trust, which frankly, even in Florida, has shown some cracks. Most of these things allow for changes, updates, because that's the one thing we know in financial planning, that stuff changes, right? Life changes. That's the one constant. And so I sometimes feel like people don't want to make a plan for fear that, oh, it'll change 3 more times, so don't bother. It's worth the conversation, even as awkward as it might be. So kind of going into some more future plan gifts, and this is kind of the 101 stuff was the most common. Using a bequest is frankly the easiest and most common way to do it. It's done with a will. It can be boom, 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 state of Florida, 2 witnesses, set, good to go. It can be made adjustments as needed. And it's something that, you know, if someone asks, when's the right time to do a will? Right now, right? If you don't already have one. But the other thing, and this is a little more advanced way to give, are some of these assets that I see that clients come in and they have, and that's potentially a life insurance contract. That, you know, life insurance is a great tool for different phases of a person's life. But many times as you approach retirement and beyond, you've got some of these old life insurance contracts, and it's funny, clients bring them into us and they're like written in scrolls and they've never looked at it, or it's got dust on it. You know, it's kind of, I don't know, we pretend like it's this pirate's map of like, oh, okay, what do we got here? And you ask, you know, what is it? I don't even really remember what that was, or I get a notification on the mail once a year, I think, or the person that sold it to me is long gone. So I have all of those. That's a pretty good asset that may be sitting idly that can be a great gift to a charity. And again, it doesn't have to be 100%. Let's just say you've got a $10,000 life insurance policy that's paid up. It's kind of sitting there idle. You can make a very easy adjustment of the beneficiary information and say, I want to give half to a child or a nonprofit, or you can divide it, right? Again, it's not an either or, but it can be a great way to make a really nice, what we call levered gift, right? You put a few premium dollars in it a long time ago, and now $10,000 is a lot of money. So we even see with some folks, and again, you have to go through the underwriting process, but they want to buy a new life insurance policy. And I'll have you know, life insurance, it's a whole new world with underwriting. I mean, we have insured people that are above age 70 for life insurance policies. And so they're buying it with the full intent of making it as a charitable gift, right? The kind of, I want the kids to have this stuff, but I want this one gift to be meaningful. Or a husband and spouse say maybe a second to die gift, right? Where that's based on when the second spouse passes away, all of that life insurance benefits is transferred to the nonprofit. So again, very powerful, impactful gift that can be made. The other are annuities. Annuities can be a great tool in retirement as kind of a guaranteed income. I kind of call them mini pensions, right? Where someone can take that income for their lifetime, maybe transfer it to their spouse for their lifetime. But at the end, a lot of times there's a little bit of death benefit associated with that. Maybe it's the value of the annuity, or maybe you purchase the annuity with what's called a death benefit rider. That can be a nice gift. That maybe you want to give it to the kids, but some portion you want to give to the nonprofit. So again, a powerful tool that you may have just lying around. The next question was the IRA, and I think that was a question, Jim, you had about TOD accounts. Maybe I'm confusing my questions, but the IRA can be a great gift. Now, I do candidly like if you leave it to your spouse. In fact, the state of Florida says that if you're going to leave it to someone other than your spouse
has to consent.
Your spouse better know about it, all right? So gentlemen, you're not leaving it to your girlfriend, all right? That didn't work, all right? It's got to go to spouse, and that's frankly the most tax efficient. It's relatively easy. They can add one IRA, and one IRA can be commingled to the same IRA for spouses. The rules change, though, for other generations and other non-spouses. But in that particular situation, you can name the contingent beneficiary, right? So the primary might be your spouse. The backup might be that nonprofit, maybe the kids. Maybe if you have 2 kids, you divide it into thirds, kid 1, kid 2, and senior center. So there you go. That's kind of a nice way to give an IRA. And then frankly, and I feel like all of this happened back in December, the rules changed on IRAs. It used to be this great gift where we oftentimes as planners said, give it to the kids. They can stretch the tax benefits over the kids' lifetime. And this is a great tool. Well, Congress said, yeah, not so fast, 10 years. That's all the kid has. They have to take those distributions aggressively over 10 years. And so that potentially creates a higher tax burden. Now, I would argue that the children,
Problem to have, right?
right. These kids, right, they never contributed these dollars in the IRA. And they were basically received them. So they should be happy for any dollar, taxable or not. But it is kind of a new way of thinking about, I used to have stuff that I would say, maybe you give those appreciated assets and give the IRA to the kids. That's what we said way back in November, right? Remember like 2019? Whoop, that rule may have changed. Maybe now we're thinking, maybe we give the IRA to charity and we live the kids with the other appreciated assets, which currently gets what's called step up in basis and may avoid a pretty nice tax. So the TOD account though, Jill, let me get back to your question. TODs are great. Now, we often recommend in Florida, if you're married, generally do accounts and you want kind of the convenience to avoid the probate process. If you do joint tenants with rights or survivorship. In fact, that's usually a default on a lot of investment accounts, brokerage accounts, checking accounts. But the TOD is just another word for transfer on death. That's a nice provision on an account where it avoids the probate process. So if you have a TOD savings account, you can name essentially the benefit of that is a child. So if you should leave this earth this afternoon, it doesn't go through the probate process, take what can potentially be months or God forbid, depending on your state, even longer, but the child would have access to it. They could essentially cut a check tomorrow, right? They go down to the bank, they'd say, I am who I am. The bank should say, honor that and say, very good, here you go. What do you need for the account? So just kind of it's a speedy estate planning process that we like. And generally we recommend, like I said, if you're not naming a spouse, to name someone TOD. The next thing I want to talk about is a charitable gift annuity. And these, I tip of the hat to the universities in the South and really across the US, because they have really latched on to this tool, which can be another win-win-win for a donor. And you may see it in magazines if you get alumni magazines and consider it. And there's, the husband and wife or someone are very happy and they're walking on the beach because all of that and they're smiling because of a charitable gift annuity. Well, what they're doing is they're essentially, and I hope you guys can see this kind of slide is, the donor is making some gift of assets that goes into this annuity product and then receiving income for their lifetime, right? So that cycle kind of continues. So they're getting something, it's a deductible gift. They're getting guaranteed lifetime income, which is very attractive, potentially them and maybe their spouse. Again, the provisions of the annuity are going to change or dependent on some other conditions. But then the remainder of what that annuity goes outright to the charity. So again, the university systems have done really well to kind of get people to think of, I wouldn't call them dead assets, but assets maybe you can avoid a tax or enjoy a deduction of the gift, earn income on that gift over their lifetime, and then boom, leave a lasting legacy to that organization. So really like charitable gift annuities. Like I said, with some of these other things, these are all tools. None of these things are magic. None of these things are perfect, but it can be a nice opportunity or a nice option, a nice tool for a certain donor during their lifetime. The next thing, and I want you may either want to lean in and take a sip of your coffee because this is going to require focus, or just lean out and go, I don't know, check the laundry for the next 30 seconds. Because I want to talk about something called a charitable lead trust. This is like 201, 301 advanced planning stuff, but for many of you may be a good fit. It does require an attorney. We are not attorneys.
We're not attorneys or CPAs.
We are not CPAs.
Check with your
We do not play them on television.
other team members.
But we encourage you to talk to the CPA or attorney that you trust about this. And I might add an estate planning attorney, by the way. So your neighbor may do really good with bankruptcies and family law, but this is a specialty within itself that I would encourage you to kind of find that specialist. But in this case, again, the donor, individual, husband and wife, can transfer some amount of property. And here is another thing that can be stocks, stuff, real estate, and avoid the taxation as it goes into the trust. Then they, over a set period of years, and this is almost like the reverse of what that charitable gift annuity, for a set fixed number of years, the nonprofit gets the income off that gift, right? boom, boom, boom. And then at the end, and this is set up by the trust, so you go into this deal kind of setting up those provisions, but generally they're 10 plus years. At the end, whatever's left, less the distributions to the charity, goes actually to the other non-charity in your life, your family, your kids, the grandkids. And so a lot of Americans are choosing something like this. It is more complicated, and oftentimes when it gets complicated, people say no thanks. But it can allow you to take something that was purchased a long time ago that is appreciated in value, to make that a gift, to avoid the tax on that gift, and actually transfer to the kids and still avoid that tax. The IRS doesn't let you do that just because you created a trust. It lets you do that because you follow these other provisions. So like I said, in planning, there's always a little bit of a give and take, but a charitable lead trust can be a really nice thing, especially, and this is a little more technical, in these low interest rate environments, to allow you to give a really impactful gift to the nonprofit, but actually allow you to have a really nice gift residual left over as a remainder to the family. So charitable lead trust. I may leave with that. I'm going to go on to questions now, and I don't know, I may pull away from this screen so I can see if anyone else posted any comments or questions,
I
or,
think there were some more in the
okay.
chat. Maybe not. So it looks like the whole group is maybe still muted. So I guess if you're able to unmute your screen, if you have questions, you can call them out to us, or you can send them through the chat. Either way.
I see Sarah had a question real quick in the chat, and you don't have to post them on chat, we can take them live through audio, but the short answer is yes, Sarah. There are credit unions that essentially allow to do really what I would call on the spot insurance policies. Generally, like you said, those are smaller policies, right? It's hard to get approved for $1 million life insurance policy in 10 minutes over the phone. And if you do, you probably need to question who you're giving your information to. But there are a lot of groups out there, and their underwriting is relatively quick. And it can be a really nice opportunity for a donor who might not otherwise have the best health situation. The gotcha on some of those is the leveraged death benefit. In other words, the amount of premium isn't necessarily as high, right? The insurance company, and I don't want to get too technical, when they do a lot of underwriting, they really figure out how risky you are, and then they're comfortable giving you a much higher death benefit. If they're doing it in 10 minutes, they're kind of just using statistics and saying, okay, you're 78, chance of you passing away in the next 5 years, X. Here's how we can at least make a little. So, but no, there are, you do not have to be a 93-year-old triathlete to get life insurance. There are some really nice opportunities out there. I would encourage you to potentially talk to a financial advisor or financial planner that you know and trust before you just go, like I said, sharing all your information with something you get in the mail. But no, great tool out there that can be used to give to charity.
And also, Sarah, since you asked specifically about funeral costs and things of that nature, we've had a couple of clients recently set up checking accounts specifically with transfer on death provisions that have a set amount of money in there so that their children will have access to handle their burial and funeral needs, because they were not, there are some folks we see that set it up ahead of time. They want all, down to the music that's played, which, preacher is going to serve and those types of things. And then there are others who are not quite as comfortable with that. They set aside some money into a checking account that they make transfer on death. Then the kids have access to the money immediately upon the parent's death and can handle the costs and needs of burials, funerals, and those types of things. Hopefully that covered it. If you've got other ones, let us know that.
I see a question about the Community Foundation. Oh man, I wish Nan was here. Nan, just recently, we was at the Community Foundation. We stole her from the Community Foundation. We are big advocates for North Florida Community Foundation. They essentially operate, if you remember one of those first things I talked about, a donor advised fund. They basically operate what could be, and you need to call them on the requirements or minimums and things like that. I don't think they're that incredibly high, but allows you, again, they serve as kind of that investment manager, and then allows you or your family and the people that you love to make decisions and distributions, in theory, forever. They help, like I said, endow it, right? So if you have something and it's growing and you're distributing the growth every year, in theory, it can operate forever. So yes, The Community Foundation has some great resources here. I would encourage you to reach out to them directly. But that's what essentially they're offering. They also offer kind of a larger pot of money. So while you can do a donor advised fund for your situation, they also have some really nice opportunities. This is probably, and I can't be a spokesman for them directly, but they kind of remind me of a local United Way. So they really collect money and then serve a variety of local charities that can be impactful for North Florida. So if I could plug them, I would, and I wish Nan was here to plug them more.
We had a question about POD and TOD, again, with our alphabet soup. That is payable on death or transfer on death is what that stands for, if you see those listed anywhere.
I have a quick question. How can your organization help us plan?
A variety of ways. It kind of depends. So a lot of the clients that we get come into our door and they have probably two fundamental things. I don't want to outlive my money, and I want to make sure that the people I love and care for are taken care of after I'm gone. And we do both of those things. As financial planners, we're kind of fundamentally managers of risk. And then kind of once we've got that somewhat comfortable and identify what the client's comfort level is and capacity to take risk is, we build investment solutions that allow them to live off the income. And so they don't outlive their money. It's a combination of things, and we highly customize it. And then as estate planners, we serve in a very unique role as really the only local corporate trustee. That is the next level. So we talked a little about trusts, but oftentimes families want a trust. You can set up a trust during your lifetime, Linda, and serve as your own trustee. You've got capacity, ability. You could use a firm like us to manage the assets inside it. But then if something happens to you, your incapacity or your death, you can say, hey, Capital City, will you guys take over and serve as the trustee? And that's very unique, really, from other financial advisory firms. It's a lot of responsibility, which we don't take lightly, but it allows us then not just to be investment managers, but to distribute your funds in accordance with the document that you gave us to follow, right? So maybe it's to the kids, maybe it's to your surviving spouse, maybe it's to charities, maybe it's just a one-time distribution, or maybe it's in perpetuity for generations and generations. So that was a...
And the best thing about trust is I've learned really quickly that there are fates worse than death, and incapacity is one of those things. And so the great thing about a trust is your last will and testament and those types of things don't take over until your death. So a power of attorney and your living will and healthcare surrogate and all those documents that are part of your estate plan are very important, but a trust would help take care of you during your lifetime. So if you and your spouse were, most of you spend time together, if you were in a horrific car accident, but it didn't kill you, your trust would allow whoever your trustee is to step in and take over immediately. Paying hospital bills, making sure the taxes on your house get paid, making sure that you've got the care that you need and those types of things. So that gives a lot of folks a little bit of peace of mind that they know that they're taken care of no matter what. And also that a lot of times when folks choose us as a corporate trustee, they may have children that live elsewhere or that they don't want to burden with that. So that's a lot of times why they might pick a corporate trustee, knowing that even if Allie and Ben are not here, somebody's going to step in after Allie and Ben to be sure that you're cared for the way that you need to.
Good overview. Thank you.
So I have just a question to kind of maybe just simplify things and help people get started. So say I have my will, I've done my documents and all of those things, and so I've reached a place in life now where I do want to think about leaving a legacy. So give me like a 1, 2, 3 of how to get started, or, what would I do first, second, and third to move me toward that?
I can tell you probably what's most common, and it's going to be it depends on your assets that you have, the type of assets, your kind of comfort level, and your other family situation and kind of other needs. So, but in blanket, I think bequests are probably a pretty simple, easy, and effective way. I really, like Allie said, I see a lot of folks that come in, they want to give a dollar amount. I really want to give $10,000 to the senior center. And I sometimes want to say, can we just give 10%? because if you die with a dollar, because sometimes that dollar amount creates stress, I think, for the donor. There's this like expectation, okay, I got to make sure at least I leave this earth with 10 grand because I'm on the hook. No, let your heart not be troubled about that requirement. Make it at a percentage. But I think a bequest can be a really effective way to do that. The other way is, like I said, to really dive into the stuff you already have. And sometimes it takes, I think sometimes the meetings we have with clients, just asking them questions, sometimes answers their own question. Because we'll start talking about, well, do you have any old, I do have this old life insurance policy. Yeah. And so kind of find those, and dead assets is the wrong word, but assets that are otherwise the original purpose, the goal, maybe that goal isn't there anymore, right? You bought an old policy because you were working and you knew if something happened, you wanted the kids to be okay. Well, you're not working anymore. So now what do I do with that? So probably find those assets that you could otherwise effectively do. And then I think that was probably a 1-2, Lori. Did I miss anything out?
And honestly, the simplest way of bequests is the way that you're going is to call your attorney that did your documents, ask them to do the codicil, which is a simple addition, basically. It says, oh yeah, I want to add this. And then it's back on the shelf and so you need to make another codicil or.
It really is a low bar. Codicil sounds like it. Sometimes I wish we didn't even call fancy words like codicil. Whoa, what? That sounds painful. No, it's 1 page. A couple signatures. So that's kind of that Mark Twain line. If you think you can do this. If you think you can't, you're probably right. So
thank you. I was looking for something. Sometimes we get to.
We lost you, Lori.
You're back.
And I guess while we're waiting on you to come back, Lori, I guess the lowest, easiest barrier of entry would be your tangible personal property. If you've got stuff that would be of value, that you could do that part with a separate writing, like we already talked about. You would just list, at my death, I want my car or my boat or this collection to go to the Senior Center Foundation or whatever charity you prefer to support. So maybe that's a second answer for you.
there was a question on charitable gift annuities in universities. And I've found this, so there may be some development officers on the call today, and I'm happy to share their experiences. But while organizations, nonprofits specifically, would obviously love to get a check, and more money is better than not a lot of money, many of them play well with others. I think it's a bit of a myth in this industry, or sometimes we create this competition, right? That FSU is competing for your dollars against the Community Foundation, against the Senior Center, against United Way. I don't really, like I said, you can split these gifts, and many of them play well with others. So it's not an either or. And universities know that. They would rather get some gift than no gift. And so allowing them to say, you can name us and this, may be what it takes for that donor to make that gift. So there was a question I saw about that. Yes, we see it is very common. It's also very common in bequests for someone to divide the bequest up, right? That one-page simple thing, it's this, this, and this. So maybe I want to give 10%, but I want to give 2.5, 2.5, 2.5, 2.5. So again,
or 50% to one and 5 or 2 or whatever to others. So you can break that up any way you can figure out to calculate it, you can break it up.
And by the way, I joke with some churches who have questions like that. If the pastor says something that you don't like, you're allowed to change that codicil. So these are not permanent. These are designed to kind of be living, breathing things. Financial planning should be. So that usually makes the pastor get nervous. So no.
Ben, just a note for whoever asked the question about the Community Foundation, the Tallahassee Senior Foundation does have an endowment that is with the Community Foundation, which illustrates what you're talking about right now.
Thank you. So yes, you can kind of give vis-a-vis the Community Foundation.
The question there about costs, I'm not sure of the different options they're talking about.
I have a question.
Go ahead.
Yes. Suppose you set up a trust then you have to hire a trustee to handle things in case something happened to both you and your wife. What might you expect to what might the cost of hiring that trustee be?
So the best news about that is let's use Capital City Trust Company as an example, since that's what we do here. So if you and your wife set up a trust, there's not a penny that you pay to Capital City Trust Company unless or until we are called to serve. So we are happy to review documents. We're happy to have a first meeting and kind of get to know you and have those conversations so that we understand a little bit more about your situation. But there's no cost unless or until we're called to serve. And then it is, we have a fee schedule that's set, and I think it's a 1.25% up to the first million, and then it goes down from there. So there's a breakdown in the fees drop as the account market value grows.
So no cost in the initial setup, just when the trustee is called to ask.
Correct.
Right. You're going to pay an attorney to set it up, right? So
To
they're going to
draft
have
the
they're going to have some set, and they'll obviously discuss. It's usually a fixed fee. Most estate planning attorneys, it's a couple meetings, right? They want to kind of figure out all your stuff and then build a plan, and then you execute that document, you sign it, it's witnessed, boom, you've got a trust. A revocable trust is it's got your tax ID number. It's not anything that's particularly,
Your social security number.
excuse me, your
Yes.
social security number. You don't have to file a separate return or anything like that for it. But yes, a trustee like us, a professional trustee, is going to charge a percentage based on the assets it managed. That includes the investment management fee. I often argue that many times 1.25 is what you might pay an investment manager out in town, period, just to manage the assets. But as trustee, we're making that as discretionary calls as well, like I said, on the spending, the appropriateness of the distribution. So many times you might set it up for your surviving spouse, and you say, and if they're incapacitated, I want you to make decisions to make sure their health, welfare, safety, education needs of grandchildren are all met. And so when grandchild comes and says, I really want to go to college, can you help pay for that? Well, look at there, the trust allows it. Yes, we'll cut the check, pay the tuition. So that's a very common thing. Now, you do not need a professional trustee. We do this all day. I would argue I'd like to go up against any kind of amateur trustee, but many people like having a family member serve. It's probably the most common because the fear feels like, ooh, there's a cost. I don't really want to pay a professional to do that. Well, the family member is going to probably call Merrill Lynch and have them do the investment management. So I often say there's no free lunch, but it is there are fundamental costs, even doing it yourself. Or, and this is even growing more and more common, they're naming family members and using us as a co-trustee. So you have kind of the best of both worlds, where you have someone trust and love, or known, trust, and love you for years. And then you have someone that does the record keeping, the administrative, gets the oversight from federal regulators nearly constantly, it feels like, is audited and all of that. So that's a really common kind of trend I'm noticing in the industry is using a professional as a co-trustee. I'll give a segue before I get another question. I hope we send this out. We tried to bake in, we've been in business for about 50 years, and we try to find what are the 10 best ideas in one sheet of paper on estate planning in general. This is not why you should hire a corporate trustee. This is not why you should hire us. This is good things for you to do. And I would love for you to take a look at it and kind of tick, tick, tick. Oh yeah, we need to do that. Oh yeah, we need to do that. All of those things are not necessarily applicable to everyone, but they're good things to review with yourself, your spouse, or like I said, people you know and trust. So it's our best ideas on one piece of paper. And
So where do you get the paper?
I think it's free.
Yeah, Karen or Maureen is going to send it out to the group. I think they've got your email addresses from where you registered. So you'll get that when you see.
Okay,
Yes,
great.
I'm going to email that out after the presentation.
And your information will be on that. Is that correct?
No.
But we're happy to send that to you.
Well, it would be nice for all of us to have your names and phone numbers just in case,
Be sure to send that to them so they can include it. Thank you, Miss Linda. That was very sweet.
Yes, thank you.
You're welcome.
Any other questions?
Ben and Allie, it's Sheila with the Senior Center. And I just want to add my thanks for you all taking time to do this today. I like you said about the percentages and all, my biggest part of my percentage on my beneficiaries obviously is going to be the Senior Center, but even I have a small percent for a couple of other ministries, and my favorite place in the whole world, Glacier National Park. But the Tallahassee Senior Center Foundation is going to be my top billing. And I kind of look at those things at least once a year. I'm looking at it, reevaluating it, that kind of thing. So things change and all. But we're happy to help. I think Karen will send out any contact information. Jim Davis is on with us. He's kind of our estate and endowment person and can help connect with you guys or the community foundation. We can be a connection for you guys to do that. And we just really appreciate everybody taking time to be on the Zoom today, and all the great information you provided and all the support that Capital City Trust does for us throughout the year. We appreciate that.
And I'll just give a little personal shout out to Ben and Allie. You know, my husband and I do work with Capital City Trust, and they're wonderful to work with, and, you know, they really do listen. And sometimes, you know, they kind of have to listen to both Mike and I, who might not necessarily think the same way, and, you know, find a good way for all of us to be together. So I'll throw that out. And I want to say again, I'm so glad that we did this today, because you can feel overwhelmed at the thought of how difficult this might be, but you know, it really isn't. I mean, we can do small, simple things that don't require a lot of time and effort that can really make a difference, and not just to the Senior Center Foundation, but, you know, to wherever your heart is. So I appreciate it.
Thank you, Lori. That
Yes.
was very sweet.
Thank you, Lori. Yes, you can do this. This is not as scary as it sounds. You are all, like Yogi Bear said, you're amphibious givers. So don't, fear not. So, and you will enjoy it. People, we know this. We study. People love it. Giving feels incredible. So, yeah, it's fun to watch too. Well, we're approaching the 12 o'clock hour. It's lunchtime. I was taught never to get between someone and lunch. So unless there's anything else, I think you guys can send out our information if you want to meet with us. Are there any other questions?
Something just popped up, but it was just a thank you. I was making sure we weren't missing something.
Okay.
Great to see some of
Thank you.
Thank you all. Let us know if there's anything we can help you with.
Bye-bye.
Thank
Thanks
you.
again.
Great.
Bye.
Bye,
Thank
guys.
you.
Thank